All right. What's up, everyone? Just did a video a little bit earlier, but there was a setup coming up here. Just wanted to show my thought process for it. So this is we're looking at the Russell right here, and this is part of the pitchfork thing. I have my entry right here, right on 50%. You can see, okay, just got in it literally. This is live trade-in right now, so just got in my first entry for it right there. What we have right here is that. So just using the pitchfork strategy, we can see from, I'll tell you what, we'll just back it up here a little bit. So starting out for today, we have the previous day's extension levels, using the previous day's extension levels going in today, and look what happened. It bounced right off the 1.146, which is that teal line. Probably make these a little bit darker, but it's all right. Right off the 1.146, and the market's been selling off since about this morning at 7:30. It had been, we had the little pullback, but then it's going up, hit off right off of the extension level for previous days and been going down. So there was using this semaphore, that semaphore, and that semaphore. We can see again this 15-minute time frame right here. Price went up. Got that, tell you what, let's put this, I'll make it easier to see. Got that signal bar right here where price closed above the 1.146 level on the pitchfork. See that right there? Closed above it, and so then we look for the entry bar, which is the very next bar, because the very next bar hit the line. So we look for the next bar to hit that 1.146 line, which was the very next one. Sometimes price will, if it's in a real strong either uptrend or downtrend, if it's going down, the next bar will just keep on, it'll open at where the high of the signal bar closed and won't hit it, and then we have to wait for the pullback, but this one did not. Next bar hit the green line, so that is the entry level. But now we can see, ever since then, we've had nothing but red bars going straight down as the market has now turned negative, or is positive pretty much most of the day. Yeah, except for the beginning of the day. It went up, now it's gone down negative. So what we do is when we get the entry right there, we go from right there to right there. I'm going to take that 23.6 off. I don't need that. There we go. So we just take the Fibonacci retracement levels, and we drop from the bottom to wherever the high is. And so the initial entry was the 1.146 level, which is that orange line, was that 1992.3. But like I said in the video from the other day, I pretty much never get in when it is right there. It'd have to be some interesting circumstance for me to do it. Plus, when we had the bar, whatever, in the Russell 2000, we had it going into the previous day's extension levels from up top right there. It's hitting that. So there's no way I'm going long right there going into that resistance level, because typically when it's going up here as resistance level, and down here, see between the two lines, is the support level if price goes down all the way there. So there's no way I'm entering a trade right here. Now, of course, price can blow through it. It does happen from time to time. It happened earlier this week. But for the most part, when price hits in this level right here, start looking for momentum slowing down in whichever direction it went into it. And so that's what happened. So then what we have is we got the sell-off, or we hit it, but then price starts selling off, selling off. So then when price comes down here and hits the median line, which is that red line right there, that is when you move the exit, which was the original exit, which was the 1.146. I'll just draw the box up here to signify the bottom of the box right there. That was the original exit. So we get rid of that when price hits the median line, and then the exit moves down to where the entry line was. God, there's a stupid fly around here. And so that's where it is right there at the entry level. And so, but what I do is I usually don't get in until the 50% level, which is right there where I'm at right there. It happened to be just right next to it. And the reason why is because if the price continues to go on down and goes all the way down over here, I'll draw a box down here, it goes to the extension level the other way, then you move the exit to the 50%. So as you can see where it currently is, price hit the median line, so my exit is just south of it. Like I mentioned I have another video actually coming out tomorrow that goes into detail about this pitchfork trade, kind of like the ins and outs of it, with a bunch of examples. And one of the things I mentioned in there is always have my exit slightly less than the exit. So we'll just leave it right at 70. So as you can see, there's my exit. There's the hard exit, the black line where the entry level was. So that ensures when it does go and hit it, I'm getting out of there. And that is my entry right there at the 50%. So what I'm also going to do is just before this 1.46, I'll just put it right here, right on the previous days. The previous days extension levels for it going into today. I'll put it right there, and it's just slightly above the 1.146 level. I mean, you can have it like right on it. I have seen it, and we'll just do it right about there. How about that? All right, we'll make it a little bit better, because I have seen it before go down there and like literally just barely grazed it, but enough to complete that. But then you miss out on getting it right there. So that's why I have that entry just slightly off of it. But I normally don't do it at 50%, and then sometimes I even have it slightly down, like down here a little bit. Just so, but whatever, gets you in a little bit better trade. So as you can see, the second entry, if price continues to go down and hits the opposite way, 1.146 down here, it'll get me in right there. And then what I'll do is move that exit to right just under the 50%, so about right there. So that one ended up being about a $100 gain, and this one right here would be a slight loss. So overall, I'd make, and how much is that? Less than a point, and a point is, what is a point? $5 or something like that. So, well, let's see. I'll tell it real quick. So that to there is 20 points. So yeah, it's $5. So $5. So it'll be $95 net gain minus commissions in there as well. So we'll say at worst $90 gain right there. So that's how it works. And then what I'll also consider doing is, I won't have it down there right there, is putting an entry right here down here at the 1.414. So I mean, I doubt, which I say that and it probably will happen, but by the end of the day that the price continues to roll on down here and hit it, I mean, that'd be extreme sell-off. That'd be another 21 points here in the Russell 2000. But hey, it definitely could happen. But who knows, unless some crazy news comes out for it. But you see it's found a little support currently right here. That could change by the time there's 3 more minutes left in this bar closing right here. So see what happens. And another reason why I like getting in between the 50% and the 61.8%, and the 61.8 is the bottom line right there, is that also you could get the measured move. And all that means is price goes down. This between the 50% and the 61.8% is a big area where a lot of support comes in, especially if you're going to get that move pushed back up. So you have that big retracement down, price hits back in there, and then not only does it hit that target, but it'll go up and hit that target up there for the measured move. But I don't consider that for that'd be a measured move trade. There's other people up there that do trade it. One guy who I do like to follow, who seems like a good dude, is his screen name is eMini Addict, EMINI Addict, ADDICT. He has a website. He does daily trades, stuff like that. He's a day trader, and his stuff's really cool. And so part of my trading stuff, the way I do, was derived from some of his stuff that he teaches, because he's got a cool system. Uses pretty much Fibonacci's for his trading levels, and his thing says that if price comes down, closes below the 61.8. I can't remember the exact rule. It's either close below the 61.8 or hits the 61.8. Then the move is done. Like, say we're expecting the upside move, but it goes down here, goes below the 61.8, and that means the move to the upside is invalidated, and we need to start looking to move to the downside. So I don't incorporate that in my trading, but I do incorporate the fact that going down to the 50 to the 61.8 is a big area to look for, of either support if you're looking to go long, or resistance if you're looking at going short towards it. So it fits in nicely with this trading right here. So 1 more minute left, and see now more of the bears are coming in for it right here. So we'll see. It doesn't matter, even if I'm gonna take this one going into the weekend. I mean, because it's serious. I seriously doubt next hour and a half, especially with we've had 1, 2, 3, 4, 5, 6, 7. The last 7 bars have been red bars, and they've gotten increasingly bigger as time has gone on. That all of a sudden, all the bulls are going to rush in with the hour and a half left in the live trading session to come in and pump back up to the high of the days, which is also where the day's previous levels are. So, but one thing I did talk about in the video earlier today is we are looking for the S&P 500, which it was going up, and ever since then the market has come crashing back down to these levels down here, is for the market going into next week to move it up into the 454 areas in the spider, which is just a reflection. It's the ETF for the S&P 500. So as you can see, this has shot below the 1.44, which is typically kind of like the line in the sand, kind of like the area that we're going to have, huge support coming in. If we can see, you can see down here, it shot past it a little bit, but then came back up, used as support. Now it shot past it. We'll see if we'll use this as support. Because if not, and if this thing is, rolling over to the downside, then oh man, look out below. That would be interesting. But we're expecting it to move back up. Plus, we have, see this gap right here. Look at that big gap right there. That thing needs to come up and get filled going into next week. For it right up here. That's a big old gap. That bad boy needs to come up and get hit. So that's another reason why we're looking for longs in the market, and for that area being for it. But as of right now, this thing is screaming downwards, saying that the market doesn't like it. Let's see here. See what Yield Forex Factory is saying. If anything, this is 46 minutes. Anything. A lot of red stuff. Let's have an averagely hourly earnings today. Went up. Non-farm employment change went down. That's bad. It's easy. How did I know that? Because it's in red. Haha. Unemployment rate went down. That's good. So 2 out of 3 were good. Mixed U.S. jobs data. Signal September pause. Yeah, that's true. Let's see what the people are talking about here. Still good for USD. In July, employment rate changed little. Non-farm payrolls missed again. Hospitality, which is temporary matter, yeah. U.S. economy is cooling very quickly. We'll get a spike in inflation. Inflation's already been spiked due to a rise in oil prices. Yeah, oil's going up. Yeah, one thing about oil is we don't have there's another live trade, yeah, in oil. Okay, that's another one to look at. Hold on. All right. So oil, we have 2 trades, the 1.146 level and the 1.618 level right here. As you can see, we had a signal bar that closed above the 1.146, and then the signal bar that closed about 1.618. So we had the entry right here, and then entry right there, depending on which one you want to trade off of. And then, so the one I would want to trade off would be the 1.618. So we'll do that. That's about the entry. Making sure it goes as low as possible. Yeah, there's a good entry. So target looking for oil right now is 83.90. Up here, there's the 1.146. Just niggle that 23.6. We're gonna save it. Save as Pitchfork trade. Save yes. So there you go. So even in oil today, look at oil as well. Oil went up, hit the 1.414 level, going the opposite way for it, and has now sold off ever since. So pretty much it looks like all the markets. Oh, look at the Dow. Dadgum. Oh, you know what? This could open another trade right here. Let's see this. Yep, Dow's got a short trade set up for it right there. You see, and this is a 15-minute chart too. Wow. Market is not liking something at all. Here is that one. S&P 500, another short setup. This one's still going lower. Yep, still going lower right there. And all of them, notice how all of them, let's just put this back on there. I deleted it earlier. Template, daily extensions. Yep, right up in it, hit it, sold off. Is it going to go down all the way to the other side right here? It looks like looking that way. Russell, same thing, hit up in the extension, now it's sold off. Dow Jones, hit right up in it, completely sold off, just like the rest of them. Oil, been pretty much open, close to it, went up to the high, now selling off. And the NASDAQ, get that off there, hit up in it, hit up, oh, right first, sold off, hit up in again, now has sold off. Let's see if there's any 5-minute trades here at the NASDAQ. Oh, it's right on it, the 1.146. We'll see if that will work. Oil, we got that one. Oil for this one, yeah. I mean, I would not, well, I wouldn't get it in anyways. It's just too big of a potential drawdown down if it does go all the way down. But if price, just continues blowing lower, it's what it clicks at 82.73 right now. But if price, well, if it hits the midline right there, then we move the exit from, which is right here, 83.89 to the entry point, which is what, 82.92 right there. But if price just blows out and we're going lower and lower and lower, lower and lower, I would not get in the 50%. I would be getting it down here. If it does go all the way down here, 78.03ish, right around there. Because then if it does, your exit you're looking at is right about up here for 290 ticks in oil, which would be awesome for it. So rather than risk that drawdown, I mean, it could, could hit that 50% and just bounce right back up here for $1.80ish gains for it, which would be awesome. But do I want to risk the drawdown of it going at least down there and maybe even lower? There's 300 right there. Whew. That's $300. There's 421, $420. So no, there's definitely no way I'm doing that. So the only way I look to get in is if it came all the way down here and hadn't reached one of those targets up there yet. So we'll see if any bulls will step in before the end of the trading day, because obviously the market is not liking it right now. Let's see what's going on here. So we have the signal bar right here for the S&P 500 right there. We don't have the entry bar yet because we're looking for a bar to come up and hit that line. Be interesting to see. Yeah, it'd be really interesting if we get that sell-off all the way down to the extension the other way, because that is always a interesting day when it goes from the high extension all the way down to the low extension. Tons of movement for the day, which it does happen from. Like, look at this day right here. Look at that one up there. Looked like it was going to break above, or it did break above the 1.44. Looks like it was going. Then all of a sudden put on the brakes, and then just complete crash all the way down to the 1.41 the other day for the rest of the day, and pretty much finished right on there. And that was support for that day. So yeah, it definitely does happen. And it is interesting because one thing I was looking at is, so it doesn't happen all the time, is using certain days as support and resistance levels. Because I mean, look at it, use it as resistance the whole time. And then we actually got a little support before it sold out. And then look at this as well, use it as resistance. So it is pretty interesting the way that thing works out. But the market is getting destroyed right now. Absolutely destroyed. Let's see on this other screen here if we can see what they're talking about. Oh, and here we go. It's breaking here, the 1.618 for S&P 500. You see the MFI, and this is the only indicator I like to use, seeing as far as oversold and overbought. If it's over the 80%, it is overbought. If it is below the 20%, it is oversold. And as you see from today, it did go in the 50-minute chart to being overbought right here. It had a little bit, but as price can go higher, we had a divergence where it made a lower high compared to the higher high. We got sold off. So unfortunately, there's no way I know of trading off that. I've looked at it before, but all MFI does is give a better picture of when to be on the lookout for turning points. And the longer the time frame you use, the better it seems to be. Yep. Sailing off here some more. But it's interesting, again, the Russell kind of does its own thing, because the S&P 500, you can see that from the highs all the way going down, it's past the lows of the day, going the extension the other way. And then the Dow Jones, the same thing, going from the highs all the way down the lows. They pretty much mimic each other for the most part as far as their day-to-day movement goes. So if you see like one of them kind of out of whack with the other one, and you get a good entry signal on the one that's out of whack, I feel very confident in taking that, because it'll probably play catch up to the, especially if it's the Dow Jones compared to the S&P 500. But then you have the Russell right here, and you see like, yeah, it's definitely sold off for sure. Look at that, but it hasn't reached past the day's previous lows down here, and doesn't look like it's going to go down here today and hit the extension level the other way. So it's just interesting how the Russell, it goes along with them somewhat, but at the end of the day, it still does its own thing and doesn't mimic each other like the S&P 500 and Dow does. Oil still having a little sell-off as well, but in order to get down in it, I would need it to go down way down here to 78. And yeah, it'll be interesting to see what's going on with the price of oil, because one of the reasons why we'll go into crude. One of the reasons why crude oil has gone down so much is the Biden administration had been releasing the petroleum reserves into the U.S. market to help combat the price. Because as you can see back here, over a year ago, back in March, price climbed up from December of 21 at $62-ish, $63, all the way up to, what is that, $130. And so they started dumping the U.S. petroleum reserves into the market to combat, because the more obviously supply you have, the cheaper the price is going to be. And as you can see, it worked. I mean, it went down. But now that we've reached the critical low levels, and we shouldn't have been dumping it in the marketplace anyways, but we did. But now that we dumped it all back in to it, I wish we had started buying it down here in the mid 60s, but I'm not sure if we did that or not. But now markets started been rising as we're not dumping it back into the market, and with OPEC and Russia, all them cutting how much they're putting into the market, and it's as you can see, it's been popping off from about the mid 60s up into the low 80s from it. So be interesting to see how high it goes. Oh yeah, there's that day. That was a fun day. That was the craziest day I've ever seen. Went to the negative territories. Let's see with the oil. Let's see what's going on here. I may have a long setup here. Nope, not quite. Closes above that, we'll have a long move and be something like at least, going up to the high 80s for it at minimum for it, but nothing there yet. Yep, okay. Well, how much time do we have here? Oh, one more minute. Let's see here. 30 seconds. If it closes below the 1.618, that'll be the signal bar that we're got a short trade here for the S&P 500. Oh, it's pushing back up. Let's see. How much time do I have left? 10 seconds. Let's see what's going to happen. Nope, not yet. Let's see. 3, 2, 1. Nope, no short trade yet for the 1.618. Still on the yellow line. So the 1.61 is still live. We can add that to it. We'll go ahead and put the Fibonacci on there. But what we're still waiting for is price to come back up and hit the 1.146 level right there, the green line, and that would signal that'd be the entry right there, and then that would put the exit down here at 44.94.50. But like if this bar down here closes below, which it still has 14 and a half more minutes to close, close lower than the 1.618, and then that would make this one a live setup for it as well. And yeah, it looks like it's powering through. I don't see why I wouldn't hit the extension level the other way, but it'll be interesting to see when it does hit the extension the other way, is that going to treat it like it did up here and put a springboard and bounce it back up some. So that'll be interesting to see. There goes Russell, still chugging along down low, but still nowhere near like the, oh, okay, well we do have a short here on not just the 1.146, but the 1.618 in the Dow Jones. So when it comes back up and hits the yellow line, whichever bar does that, that'd be the entry for it, assuming this one remains the low. Like if this bar goes and makes another low, we would just keep on drawing the Fibonacci retracement level lower. So for that, so like this, when you have pretty much two of the same setups between the Dow Jones and S&P 500, what I like to do is typically one of them will run more than the other one when it goes back the other way. So I like to have, like, instead of like say my initial entry being the 50% right here, I'd move it up at least to the 61.8, maybe even higher than that to go short with it, because typically like one of them will hit off of it and then go and complete it, but another one will run further before it does go on back. So yeah, I'd have like the entries around the same areas, say like up here-ish, like maybe like up here or something like that, and same thing with the Russell, just get in at a better price for it. But we just broke to a new low today, and we're only 3.5 points away from hitting the extension, so it looks like it's going to hit that here pretty quick. See something here. OBS settings, hotkeys. That's what I'm looking for. There's no pause streaming, pause recording. I was going to pause it here. I guess you can't pause streaming, can you? The Dow Jones is almost touching the bottom of that. S&P 500 isn't quite. See how much Bitcoin sold off? Is it? No, it hasn't completely lost it. Yeah, that one's breaking down below it here. So see if this kind of line in the sand down here's hold, where we had that kind of like look like it was pushing down to extreme lows right there. We'll see if that holds and it bounces off of it. If not, it could get maybe like a fake little breakout, even maybe push lower, and then we get it reverse back up. So it's either going to hold this and go back up, or I think it may go a little bit lower, somewhat, and then you get that move back up into it for the spiders. But little support showing right here. And this thing still got 2 more minutes left in it. Yeah, some bulls come back in this candle. Let's see what happens here. For it, so once this comes up, well, once it hits the yellow line, that'd be entry there. When it hits the green line, that'll be entry for the 1.146. So, but we'll use the entry for the 1.618 because if the price comes up and hits the median line up here, that'd move the exit to that one right there. So better profit target than right here. So now we're getting little bulls come back in after we've had 1, 2, 3, 4, 5, 6, 7 red. Almost 2 straight hours of nothing but down movement here in the market. And now our first green potential candle. And what a coincidence. It's pretty much almost at the extension lows of the day. So what a coincidence. Funny how that works. Now it's popping up a little bit. Same thing here. Came down, not as close to the Dow Jones, but pretty close to it. And now it's popping back up again. And then ye old Russell is just doing its own thing again. It's at the 61.8 and going up again. So that's interesting to see if now the people, the bears, the people who were willing to sell at a lower price each tick along the way, if they've taken their profits, and market's going to move back up some here. Jenny, what is that? Genius Sports Limited. What's to do with them? So, no long there yet. Potential long. Both of them. Nope. There you go. Potential long right there. But it's got to at least come back down the yellow line for that one. Green line for that one. Profit target's $9. SMCI. gracious. Whew, that'd be a nice one. Oh wow, look at this thing. So whenever this one comes back down, goodness gracious, to here, yellow line right there. Or what about the green? Would the green work? No, there we had close above and gives you our previous day's highs and lows. There's close above, hit it. Yeah, that one did. So, but for this one, yeah, that's gonna be one to buy here. No, I guess not, because well, say the entry's like sells off. Entry's like somewhere there, 150. Came down and hit 127. 151. Huh. Yeah. Super microcomputer, and if it goes down to $8, it's probably bankrupt. That's interesting. So Super Micro Computers Inc., if it ever sells off, comes back down, you see it does have a gap to fill right here. See that? Does have a gap to fill right there. So eventually that will come back, and also another even another gap right in here as well. Look at that. Lots of gaps it needs to come back and get filled. But if it does come back, and let's say that's not that long of a time frame. Let's say in go back, even right here. We'll go back right here. So we'll say September, almost a year from now. You get to sell off, you know, the market's selling off. This one's coming back down as well. I mean, it's had a great run up all the way from 35 to 339. A good 10 bagger right there. But let's say it sells off, come back down, you know, it's going to come back and even move this back down to, well, let's say at least right there. It comes back, hits right there, but even goes a little bit lower and fills that gap. Well, if it hits the median line, then the exit would move to the entry line. Let's just say the entry line's right there. So we're looking at, you know, $24, $25 gain. It's good. What's that? 13%, 14% gain right there. So that's good in that. But the lotto ticket one for this is if price comes back, hits the 50, and obviously, which 50 doesn't matter, but hits the yellow line, which that would be the entry bar, so that's what we're looking for, because right here, you see price closed above it, never came back and touched the yellow line, so that's why we're looking for that retracement back. So if it does come back, hits the yellow line, maybe it doesn't fill this gap all the way, but hits the yellow line, the target is still going to be whatever, and say this is the high of it. It doesn't go any higher. If it goes higher, you'd keep drawing this up, but just for this example, stays right there. Your target is going to be all the way up here, the orange line of 391 up there. So, you know, buying it at 196. And this is just a hypothetical example. You know, 100% profit right there for it. But if price does hit the median line right there, then the exit is just going to be where the entry line is for that one. Assume, just an example of here right there. You know, of course. You may take, you know, way over here or something like that, but that's definitely, in fact, I'm going to add this to my watch list because I'm going to watch that, because whatever price comes down and hits the yellow line, I'm going to buy it there, and then in hopes that that's going to be the support, and it just rockets on back up. But if not, it goes down and hits the red line, get in there again, and then just have the exit be where the entry was. So SMCI. There you go, NASDAQ. Cool. All right, let's go back to markets, see what they're doing. Oh, well, there you go. Look at this. So while we're talking, looking at that, price did go down, in fact. Ooh, two things happened. Interesting. Actually, let's go 15 minutes. That's what we want. Yeah, here we go. So, interesting. Price did go down, hit the extension low of the day, and it closed below the 1.618. So that's another. When price hits the yellow, that's gonna be entry right there. And so probably I assume did the same thing. Yeah, did the same thing. So closed below it, went down. Okay, well there's the signal. There's the entry bar right here on this one. So this is a live short right here. There's a signal bar, closes below. Well, we had the signal bar for 146, but since it did the 1.618, we're just gonna use that one over it. So we got it closed below there. Went up and hit it right there. There's the entry right here. Right there on that black line. That's where that hit that bar. So the target we're looking for this one, and we'll just draw the box down here. It'll be top of that box at 35,085. So if you had gotten in right here, right there, you know, exit down there. It's a nice little 130. Though the hard exit's about 144, but my exit would be like 129, 130ish. Make sure you get out. Like I said, I'm not getting in right there because look at it going the other way, all the way up here, potentially up there. That's a lot to be tied up with right there. So what I'll be looking at is, and what I really like to do is get in a trade the opposite ways in different markets. So like right here, I have the long, and I like to get in, you know, a short trade either because you got a short setup right here or a short setup in the S&P 500. Because then, you know, at least one of those trades for the interim, one way is going to be correct and you're going to get filled, and the other one you just have to ride it out. But you know, at least one of them you'll get an easy win for it, no matter which way the market goes, because you're both ways in it. So let's see, this one's still not live set up yet. Still waiting for that, but look at that, ticked off the extension low of the day. Find support. Currently, we'll see. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 bars in a row in the 15-minute charts. So you're looking over 2 straight hours ever since 11:45 a.m. of going nothing but down. NBD, nothing but down right here. In the S&P, in the Russell, in the Dow Jones. Yeah, I wish I had a green one in the NASDAQ right there, but that doesn't matter. And this one is in, let's see, close lower, and then their signal, there's entry right there. So NASDAQ is in a short as well. There we go. There's that, the 1.416. So if price closes below the L line, then that would be the signal bar, and then wait for another bar to come hit it and make the entry bar. But here's the exit currently we're looking for the 1.46, which is going to be that one, which would be close to the lows of the day. And you know the way price, what's this saying? Markets today, stocks climb on strong Amazon earnings and lower bond yields. Well, that obviously was, 5 hours ago. So if NASDAQ continues like the S&P 500 and the Dow Jones, it should go down and hit the extension low of the day down here, which would fill obviously that target from that trade, but it would open up another target, another trade for the 1.618 going short. Here you see on the 15-minute the MFI in the NASDAQ is now in oversold territory. You can see down here, there's last time it was oversold, had a nice little pop back up into here. And so it's finally hitting that, so we'll see what happens in the next 56 minutes. Same thing for SP 500. MFI is oversold. See, here is oversold right here. Pop back up real fast into overbought. Overbought, we had it push back down. So we'll see in the next, especially half hour, if anything comes of this. Doesn't mean it's for sure going to pop back up right away. Sometimes it'll ride down being oversold. Let's see about this guy. So yep, this one did go lower. So we'll see if my prediction is correct or just completely off base, where we get kind of like a fake push lower, and then we get a pop back up. Bitcoin is still doing its thing, still in the box. I mean, here you can see, like, look at that, it had a fake I keep on saying Facebook, it had a fake push lower, got that pop back up in there. We'll see if the SPY is going to do the same thing. But right now, it's just continuing to sell. Any type of bullish momentum, it gets zapped back real quick. And it's turned red. And it's turned red. Red. Yep. As of right now, Bulls giving up for the weekend. They're gone. The Bears are controlling it. All right, so 8 seconds left, 7, 6, 5, and we may have the first green candle here. Unless the market goes down 4 points. Oh, we did it! We did it, guys. We did it. We had the first green candle in over 2 hours. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yep, over 2 hours. First green candle. We did it. Congrats. There it goes. I love all my viewers. It's awesome. Streaming's awesome. I love it. So much fun. There we go. We did it. First green candle. And it's bouncing off the daily extension levels. Oh, do we have the entry here? Yep, it just touched it. Did that touch it? Let's scroll this thing down here. Shoot. Oh, dang it. Get this thing back down. That's not what I want. There we go. Yeah, touched it. All right, so the short for